Hello, everyone. I just quickly want to go over what's going on with GameStop, AMC, and all these other stocks that have been limited in their trading on all these platforms, short selling, and venture capitalists and hedge fund managers and whatnot. What's going on with the stock market? This weekend, I'll make a video giving the basics of the stock market as I understand it. I have a unique point of view about the stock market and how I invest. I'll be showing that and where it came from, my history with math, money, and stock market and poker, how that all relates. It's very similar, poker and the stock market. There's even lingos in each world, and I think that's one of the things that puts people off about investing is the lingo to make everything sound more complicated than it really is. So the first thing to understand is shorting. Shorting is and puts and calls. They're literally just trying to predict if a stock is at $10 per share. They're predicting that the stock next month, let's say, will be at $20 or $5. And so in this case, what happened is a hedge fund, a big conglomerate of a lot of capital, and they can invest, more capital than they even physically have sometimes. And that's one of the problems. They bet that GameStop would be down to a certain amount by a certain time period, that being the end of January or in many cases today, Friday, January 29th, 2021. So they made this bet, and then other hedge funds kind of followed suit, and all of the hedge funds ended up, when they put in their orders, betting 100 and up to, I think, 140% of the stock that existed would be down to a certain point, which means they over short bet. And because all of this isn't transparent, that's the real problem and what we need to pressure politicians to fix. They're talking about doing an investigation into Robinhood and these other platforms and stocks and the GameStop situation. Sorry, my screensaver just came on. But what they really should be doing is making hedge funds investments transparent, right? So that's number one. That's the way to fix this. So then what happens is someone on Reddit or some group researched and found this short position and said, wow, if we all start investing in this stock, if I put my $1,000 in, if someone else puts their $50,000 in, and that happens enough, it won't go down to the amount the short sellers need it to go down to. And the price will actually go way up and we'll all make money. They'll have to pay our piece of the pie they'll pay us, so we'll win. And that's really where the crux of this going viral took off, was that short sellers are the elites, the hedge funds, the billions of dollars in capital in these big firms. Melvin Capital is the main one that's being thrown around, and then all of the normal guys, the Joe Sixpacks, or more appropriately, the younger tech savvy guy on a forum on the internet of Reddit, posted his research, and other people took off with that research. And there probably was some people and some name calling being thrown around about, let's get them, let's counter Wall Street. And that's really what it was. So that action of, here's a position that if we invest, it will counter that position. It's called a squeeze. They're squeezing out, the money from the short bet. And they did that. And the average person started doing that, and it drives the price of the stock up. So now the short sellers have to pay multiple times their bet. So the example used was, let's say, Kodak by the CEO of Webull in a recent live podcast he did yesterday. So shout out to Webull. And they talked about, in Kodak, they were going down. A lot of firms were betting that it was going to go down to a certain amount by a certain time. Government came in, gave Kodak a loan, and the stock went up 400%. So now some of those short bets, betting that will go down, owe 400% their bet. You bet $100, you now owe $400. You bet $1 million, you now owe $4 million. And that's where shorts kind of run off the rails, especially when you can potentially, or groups of firms can bet more than there is stock. They can exceed the current market cap, which is just a fancy word for how much money a company is worth based on their stock price, because no one really knows how much a company is truly worth at any given moment. That's what the market is trying to determine. So again, I'll go over this in my future video, but the stock market is literally just trying to put a value on a company given their potential for profit and their current profit. And so a lot of people, this is speculation. It is betting, right? It's saying again, to use a poker analogy, I've got pocket aces. I'm a big favorite to win the hand. I believe Tesla is a big favorite to revolutionize the car industry. I'm going to put my money in the stock market on that company, knowing that their future profit is huge. And so then they'll be trading at a market cap, a stock value, where the company is valued at more than it can currently prove it's worth. So that's just basically the stock market. Is you invest in these companies you believe in. Money moves from companies that aren't doing business the right way anymore, or that are in old technology, and it moves to new technology. And that is really one of the beautiful things about the stock market. So anyway, back to the GameStop story. So the price is going up of GameStop. Everyone's jumping in, and that's where it does get dangerous, because while a lot of normal people who just put in, I put in $1,000 and made $1,000 overnight, it creates a bubble, because the stock is running up and it will come down. And anytime in the stock market, just like in poker, when someone wins, someone else loses. And so in this case, the reason you saw all this fervor, all these articles, is because the people losing are the same people or the same institutions that lost all that money in the early 2000s and 2008 crash, and the stockholders are on the hook for it to bail out Wall Street. And you're seeing that sentiment of, we figured this thing out. We want to invest to take down that money that was given to them, or that they're investing and then they shouldn't be investing because it could be illegal. Again, this whole video is speculation. I'm not a professional investor. I invest my money, and I want to talk about that. And so what then happened for unknown, and this is where it gets really fishy. So the stock price is way up. It's trading really high. It looks like the short sellers are taking a huge loss, and they did. Some of them said they closed out their positions, meaning they paid, what they could afford. Then a forum gets shut down. The Wall Street Bets forum on Reddit, which is where this all started, gets shut down, gets taken off the internet. And a post showed the reasons why, violating their terms of service. That was really fishy. And then the platforms started limiting trades, but they didn't just limit buying and selling. They only stopped the individuals from being able to buy. So I could sell the GameStop or AMC or BlackBerry stocks that I bought, but I couldn't buy more. I can only sell. So who's buying? Who is buying then if the public, the retail market, which is what the public is called, again, just kind of a term for the public investing, retail, can't buy? That was really fishy. And the best explanation that we got just yesterday was that when you sell your stock, the money is the stock, and someone else is buying it with their money. Another firm, a brokerage firm, is doing that trade. And when you buy, the money is fronted. And so that's another one of the problems, is that your collateral percent, in banking, this is how it works, which is really crazy to say that our banking system went this way. You deposit $1,000, but then the bank can move around your money to multiple times of what it actually has. So if everyone went back to the bank and pulled out their $1,000, the bank doesn't actually have it. They're trading it, moving it around. So the institution moves in that way. The stock market moves in the same way. And what we had allegedly was these companies, these platforms, Robinhood, TD Ameritrade, Webull, many of the others, their firm, who they trade through, told them, we're not taking any more buy orders for these specific stocks, because if we do, it could close down the whole market, because there's no money there to pay out if someone sells their stock. I don't see how you can only shut down one side of it and that be true, because someone is then still buying my shares and I can't buy someone else's shares. So that was really the gist of what happened. They shorted GameStop to a number that didn't actually even exist on the company's sheets or the market cap. They shorted 140% of the stock. Someone found out, posted it on Reddit. The investor said, we'll make money. And stock market, the company that shorted, and the people that shorted, whoever, an individual can make a short play, but they would lose money. And you saw that start to happen, and it started to happen at a fever pitch. And yes, someone will be left holding the bag. If you don't know what you're doing, this is not the type of investing you should do. But again, I'm going to show videos going forward on my channel of investing and just managing money, because it's something that has a lot of mysteriousness about it, and it shouldn't. I've been fascinated with money since I was a kid. I actually have a book. Yep, right here. I really recommend this book to anyone out there who wants to learn about money. It's called Frozen Desire and the Meaning of Money. It's written by James, I'm going to mess up his last name, maybe Buchan, Buchan. I read this a while ago. Basically, if you're not going to read the book, which a lot of people don't read books much anymore, the too long didn't read version is that money is frozen desire. Money is basically a holder for what you want later. You have money, you can buy a car, a house, land, food. So it's trade for the basic necessities, but it's also trade for what you want. That's the function of money. Instead of just trading, a chicken for a brick or a hammer, and that was the old system of just barter and trade. You now put money into the equation so someone can sell their chickens, save their money to buy something bigger and not have to go to all the trouble to trade a whole bunch of chickens if they're a chicken farmer, let's say, or eggs to be an easier medium. And so Bitcoin, I'll also be diving into that. I don't know a lot about Bitcoin yet. I'm going to tackle blockchain. I think I do a good job of explaining complicated things that I get a pretty good grasp of understanding by my research to in simple terms. So that's what I'm going to try to do with the stock market and then with Bitcoin, because the moral of the story is two things need to happen, probably won't, from this debacle in the stock market in 2021, is that hedge funds investments, firm capital institutions need to be transparent about what they're doing with the money and how that works so that it can be seen by the public very easily. And two, blockchain and the algorithm behind Bitcoin needs to be instituted for these type of trades, because then this can't happen. The trading system with the brokerage firms and DTC, who controls all the money that gets traded, basically goes through that institution. I don't fully understand them yet, but they were thrown around a lot in the research I was doing yesterday. They get to basically control things, and when the money can't be there, they raise the collateral level, meaning when I buy a stock, Robinhood doesn't have to give 100% of my money. That's what was happening. So to again summarize in a different way, I buy a share of GameStop for $100, and my $100 is in Robinhood, but they don't have to give immediately $100 to the firm they're buying through. They give a certain percent, 2% in most cases, and that number was raised to 100% yesterday, Wednesday, and the firms couldn't do it. They couldn't use the money that I put in my accounts to buy stock because it wasn't there on their end. And so that's something that's, a function of our institution. Will that change? It should. Will it? No, probably not. So I don't want this to be bleak, because I want to show people how to make money in stock markets, which is simple investing. I want to show how you can take just a few $1,000s and over the course of 10 to 20 years, turn it into $1 million. Anyone can be a millionaire. It's just a matter of having the discipline to do it. I plan on doing it. I'm working on it now. I'm working really hard in the solar industry. It's one of the reasons I was able to cross the country in a solar powered truck. I saved up all of my money for a few years to build that truck, and I'm trying to turn that into a business. But I'll be giving this information out for free. I'm pretty sure I'll be opening a Webull account because of the disclosures and the information that their CEO was going out there trying to put out to make everything clear about what happened, versus the infographic and notification I got from Robinhood just saying basically that we're trying to protect you from very volatile situations, versus if they had said, look, the way it works is that we can't allow you to buy more stock because the money isn't there because the collateral level by DTC was raised to 100%. They didn't say that. And then the forum getting shut down, you're probably never going to get a good explanation for that. In my opinion, it's just another form of the censorship train that we're seeing running, the ban hammer. Anytime something starts to get dangerous, or a new idea, or something is being tossed around that hurts the people in control, or the people in control can put pressure on that forum, it gets shut down. So it got banned and shut down, right as this all was happening, and it was really fishy. It still is. I don't think any internet forum should be shut down like that. I think we should be protected on the internet forums, Facebook, Twitter, all of them, Reddit, through free speech and the First Amendment. Even though they're private companies, you could simply just say that there's a section on these forums where free speech is protected. When you sign on to your Twitter for the first time, you could opt out of seeing the free speech protected section. But I think most people would opt into it, especially in America. And it would lead to some craziness on the internet. You would have to make sure that, if anything got really far down the rabbit hole of being dangerous or violent, that were prosecuted through laws instead of just censored because the censor I'm checking saying, this person said something. I don't like that at all. It sounds dangerous to me. Block. Or these people are talking about Wall Street bets and they're saying mean things about Wall Street. We're going to take it offline, when there's really a lot of value in that whole forum. Why not just take off the people who were saying the mean things? That didn't happen. So Josh Hill here, signing off. It's early in the morning. I've got to get a lot of work done today. This is the shirt I slept in. I went to the bathroom, comb my hair. I'm going to shave this, but it's for a character. Check out my other channel, Awaken Solar. I'll be uploading more videos on it soon about my trip, and look forward to disclosing how the stock market works and how I invest, and hopefully you can make some money too.